Good day from Ho Chi Minh City. What a week for equity markets and currency markets. The Nasdaq has already lost almost 7% this month in October. The S&P is down 4%. The Viet index is down about 5.5%. All this based on many factors, including the ongoing China-US trade dispute. We would expect this to be resolved by the early 2019 after the US midterm election that would take place November 6. The thing to look at basically are that currencies have stabilized against the US dollars except for the renminbi, which now hit 694 a couple of days ago, 2-year low, sorry. Then we have seen stability in the yen, in the euro, and in some of other emerging market currencies, including the Mexican peso, the Philippine peso, etc. So what it tells us is there's no real systemic risk right now on the mind of investors. The main thing to follow for the next couple of weeks is basically if volatility increases so much that investors pull out their money out of risk asset market, including equities, currencies, real estate, and so on. That's the thing to watch. So volatility is very important. The VIX has been moving quite a bit in the last few days, sometimes 20% a day, but I'm not looking just at the VIX, I'm looking at currency volatility, which is determined by various factors, including CDS spreads, and so on. In Vietnam, we noticed that so far, year to date, the market has been okay. It's been a bit lower than our forecast. We had a forecast target range of 960 to 1040. We're at 951 as I'm speaking. So it's a bit lower. So there's a chance that it may go to retest the 900 level. And that's not impossible given the situation on global markets. Other than that, China just published their Q3 GDP that came out at 6.5% today. It's a bit lower than expected. But if you look at the numbers behind it, overall, it was not that bad. So that's probably why market will stabilize next week, in our opinion. So we're looking at a October month for equity markets, and a rebound in December. And the reason we're saying this is people confuse October with September. Globally, September is the weakest market for equities. October is not a real weak market. It's just there have been a few crashes in history where it happened in October. So we think October is going to be weak, but we have a rebound in December. The reason we say we have a rebound is because we think hedge fund and some pension funds that are not making very good money this year will have to try to push the market higher. We've seen it in other periods, including 1999 and other years since then. In terms of what is interesting, other than that, we looked at about 100 stocks globally in the last few days, their share price movement, evaluation, and so on. And we think there are sectors that are going to be interesting to be buying in the next couple of weeks. One of them is airlines. Airlines have been crushed, obviously, because of higher oil prices. Right? We think oil prices are pretty much at the top of the range. $80 and WTI is probably the maximum. Therefore, some of these airline stock prices should rebound. We still like, in Vietnam, Viet. We still like Airport Corporation of Vietnam. These stocks have not done well, but we'll be buyers of those things in the next couple of weeks. So I will talk to you next Friday from Ho Chi Minh City. Have a good weekend.